News, sponsored by Lexus of Las Vegas and Lexus of Henderson.
COVID-19 quickly sent Wall Street into a bear market in March. The stock market has rapidly rebounded, ending what is now our shortest bear market ever. And we have local financial professional Brad Zucker from Safe Money Advisors live to share how you can capitalize on the rising markets. Brad, good morning to you. A lot has happened the past couple of months, but please tell us what has happened on Wall Street since COVID-19 hit.
Well, back on February 19th, the S&P 500 hit its record high, only to be followed by a sharp 34% drop by March 23rd, entering bear market territory, which is when stocks continuously decline. But since the bottom, the markets have exploded into a bull market run, which is when stock prices increase or are anticipated to increase over a certain amount of time of months or even years, making that February to March period the shortest bear market on record. But investors who stayed the course and continued deposits into their investments may be seeing their balances hit pre-COVID-19 levels.
So the markets are rebounding for investors out there. What should they keep in mind?
Okay, three key takeaways. First, your time horizon is the amount of time before you need to tap into your investments to create retirement income. Younger investors have a longer time horizon and can bounce back from market losses. Those approaching retirement may not have enough time to make back losses on their investments. But young or old investors, if you're concerned about the turbulence on Wall Street, you need to rebalance your investment portfolio. Second, there are several savings and investment vehicles that can help build retirement wealth. Monies that have already been taxed that go into a Roth IRA provide tax-free income in retirement. Pre-tax deposits into 401ks and IRAs will lower your taxable income for the year. And those that just retired and no longer have a paycheck need to use a combination of investments and insurance products to provide income in retirement. And finally, costly decisions are usually a product of emotions like fear, anxiety, and greed. Sitting with a financial professional can help you sort through all the confusion and the angst and make educated decisions versus emotional decisions.
And Brad, really quick before we go, what could derail this bull market?
Well, news of a vaccine have helped boost the stock market, but unpredictable events can also derail it. Schools across the country have opened up. There's concerns of another wave of COVID-19 that could shut down local and state economies. But we have a presidential election just around the corner that many believe if a Democrat or a Republican presidential win could impact the stock market. The history shows the Dow has been positive in all years with the Democrat or Republican, but not significant enough to make long-term changes.
All right, Brad, thank you so much for all of that advice. We'll have all of this too, ktnv.com/money. We'll be right back.